Let's start on this wonderful collection of stamps that were sold, and there's a couple of more sales planned, Bill, for the next 2 to 3 years. The United States Stamp Treasures William H. Gross collection, and you made $10 million, which you're giving away to charity. Talk to us about this investment and whether it was a good one in the end.
It was a bit of an onion.
I'm saying, talk to us about your stamp investment and whether the whole thing was a good one in the end. This one, for example, making almost $800,000. Do you remember what you paid for the block of 6, the Bible block of 6?
The Bible block is 6, and it's called a Bible block because it was found in a Bible over 100 years after it was put in there, and it was a block of 6 of the original 10-cent U.S. stamps. I paid, perhaps $250,000 for it, and it sold for, I guess, $500,000. It's indicative of what stamps have done over the past 10 to 15 years. They're sort of like art, sort of like painting and perhaps classic cars. Investors can appreciate them, but at the same time, they can experience appreciation.
Now, of all of these, and there was more than 125 lots or so, Bill, were you surprised at the outcome?
Well, no, I expected it to be a strong auction. There were only 3 lots unsold, so everything sold. Many of the pieces were 2, 3, 4 times what I paid for it in terms of my cost. And so, it's been a great investment for me. Let me point out that, as you have, that it's all going to philanthropy, not philately. Going to philanthropy. Doctors Without Borders is one of my favorite causes. The New York Neediest, sponsored by the New York Times, is one of my favorites. And so this $10 million, in addition to the $27 million from prior auctions, will be all going to charitable causes. Now,
Bill, will you continue to sell these off? Will you sell your entire collection? What prompts it now?
Well, I'm going to sell the balance of these, the U.S. stamps, with the exception I'm going to keep my complete U.S. stamp collection, the only complete stamp collection ever formed, and the only one, of course, in the world. So I'm going to keep that as a memento of my collecting years beginning in 1993. But the rest of them, there'll be 4 or 5 more auctions, probably the value, upwards of $40 or $50 million. And so my collecting experience ultimately will have generated, in my view, perhaps $70 or $80 million for philanthropic causes.
It's pretty phenomenal, given that one of the reasons you started all this was because your mother tried to start collecting, but she didn't have as good a track record. She didn't seem to have the eye. What did you learn, let's say, over the years from collecting stamps that helped you in your investing career?
Sure. Well, she bought stamps that were very common, tens of millions of them, 3-cent commemoratives, and they weren't rare. When she sent me to San Francisco to sell them for my college tuition, dealers offered virtually nothing for the stamps, and she was quite disappointed. What I vowed to do was to buy the right stamps, much like you have to buy the right stocks and buy the right bonds. And ultimately, in terms of an investment philosophy, it pointed out that supply and demand obviously is important, and that you want to find that rare gem of a bond, a rare gem of a stock that can be, as Peter Lynch once said, a 5-banger or a 10-banger.
Well, I was in the Lotte Palace the other night, and it was an exciting night, and there was some very, very excited philatelists, because a couple of the stamps in the collection did go for maybe, good value, let's say, maybe a better bargain than might have on another night. So let's move on now, if you don't mind, Bill, to some other investment opportunities. You have been talking about bonds and this move in bonds. You sent out a couple of tweets talking about hedging costs. Let me just remind viewers that you sent out Euroland, Japanese previous buyers of 10-year treasuries have been priced out of the market due to changes in hedge costs. For insurance companies in Germany, Japan, for instance, U.S. treasuries yield only minus 0.1%, 0.01%. Lack of foreign buying at these levels likely leading to lower treasury prices. Is that a one-off move that is now done, or do you anticipate that move will continue given the way currencies are fluctuating at the moment?
No, I think it's basically a one-off move. Your prior guest spoke to it in detail, but it has been a phenomenon in the past few weeks that has led foreign buyers, and I'm talking about insurance companies and other corporations that buy U.S. Treasuries for various reasons. But, the value in terms of U.S. Treasuries dropped suddenly by 30 or 40 or 50 basis points in terms of yield. And so, that's just one of the factors. We have the employment report, we have potential inflation, we have the Fed's Powell talking about, perhaps 3 hikes going forward. And so, at these levels with the 10-year Treasury at perhaps 320 plus or minus, it's hard to sustain value there if ultimately Fed funds are going to be at 3% in the next 9 to 12 months.
We just had John Williams on the program a little while ago saying he would love to set a new record for an expansion, that we're very close to the longest expansion in history. And the Atlanta GDP now forecast is at 4.08%. Is this economy running hot, Bill? Do you anticipate inflation rising?
Yeah, I think it is. I mean, unemployment is 3.7. That's a bit of a awkward statistic because of people that may want to work but aren't listed in terms of the role. So it's hard to know whether that 3.7 is really indicative of wage inflation. We saw the numbers in terms of wages at 2.6%, and that's still rather controlled. But yeah, the economy is running hot. Why is it running hot? It's running hot because of a $1 trillion deficit and because of corporate tax cuts, et cetera, et cetera. And so the heat in terms of GDP may be reflected as well in terms of the heat of equity prices and potential asset bubbles because of the $1 trillion that is basically being thrown into the economy very suddenly.
So, Bill, can I ask you for your outlook right now on where, say, 10-year and 30-year yields are headed here in the US and perhaps also in Germany?
Sure. The U.S. Treasury 10-year at 320, I don't see much of much damage potential there. Perhaps 330 or 340. We've just broken through an important technical barrier, so there's probably a little room to go, but not a lot. In terms of Germany, with the 10-year Bund, the same maturity, the same quality, basically at 50 basis points, the spread between the two is 270 basis points. Ultimately, I think, and that's the problem with portfolio management, ultimately that 2.7%, 270 basis points, should close somewhat over the years simply because who would want to buy a Bund at 50 basis points when you can buy a Treasury at 3.2%? Only when the hedging costs, dictate that. And so I think over time, Treasuries are better than Bunds, but both may go higher in yield.
And Bill, I want to ask you as well, given dollar momentum over the last while, have you been making any little changes to the unconstrained bond fund, whether it be in corporates, agencies, or indeed Treasuries?
Yeah, basically, we've been a seller of bonds. I'm short Bunds that I just talked about, meaning I hope the yield goes up and I hope the price goes down, and it has in the past few days. I'm short Italy, which is a tender spot, as you know, and investors are beginning to question the credit of Italy. I don't expect a disaster, but I expect deterioration, I guess, in terms of the price and higher yields on Italian 10-year. And I'm mildly short U.S. Treasuries over the past few weeks, and all of those investments have paid off.
Well, Bill Gross, thank you for joining us of Janus Henderson, and thank you, of course, for speaking to us about the markets and obviously about your philately. We're going to go out on one of the lots from the other night. It's lot 60, depicting Lincoln's assassin, in fact, John Wilkes Booth, and the estimate for that was $10,000 to $15,000. One of the many wonderful stamps in the William H. Gross collection. More to come in the next couple of years.